Hey everybody. So in today's video, we're going to go over the market and talk a little bit about the carnage that happened here today and some of these names. We're going to show key levels. We're going to come up with a plan on what we're going to do tomorrow with those levels, and we're going to regroup. As always, subscribe to this channel and click on notifications because what we're about to go over is extremely timely. So let's just get right into it. Let me just organize these up so that we have put them all in alphabetical order, and we're just going to go through them. Someone usually puts the timestamps together and then I can list them later. But, you know, the one I got asked about a lot of we're going to refer to them as meme stocks today. And I'm just going to run through them in alphabetical order as they appear. But there were some that came in today that to me presented a buying opportunity. And there's some that you need to be somewhat concerned about. To me, AMC, it didn't really do anything wrong. So you broke down this little rising wedge right here, right? And then you gapped right here on this line, and then you broke down to here. Now, if you did that in all this carnage that happened today with like GameStop and some of these other big names, big Momo names, this did not even break this level. So I'm still in a decent flag position here. I'm not crazy about having 3 red bars in a row, but frankly, it's kind of setting up here. Like this pattern has completed itself. So usually, just so we understand this, what I mean by that is, let's get rid of this blue line for a moment. So you see how you have this rising wedge? So when these break, that's their target. Their target's this low line right here. Okay, so that's where this blue line came from. So you're essentially there. I mean, you were there within 5 cents today. Okay, so this move's complete. Now, what is forming here is this. Okay, you have a falling wedge that's forming within this flag. It's a minor one, but it's there. So I think you should pay attention to it. I do think you should pay attention to it. I don't feel that this move is over yet. I think it's just beginning. It's just my opinion of it. I really have a basis of it from staying, like we've seen what happened with some of these other names, but like when you can clone these, when you clone them, you just slide them right over and you'll see how they fit. So you can see you're at the lower end of this. I think that you could break out here and at least retest this. It does feel that way to me. We're just not breaking down. A matter of fact, if you really want to get super technical, which we're going to, see how you have this doji up here and then you have like this evening star pattern that was completed. Again, I'm going to link the candlestick video for those that are new so that you can review that at the end of this video that shows these 5 patterns that you really want to study and know. But notice today's bar. Notice how we didn't open at the low, close at the low. None of that happened. We're stuck in the middle. We're getting a little uncertainty and we're getting a little tired of selling, and we're going into option expiration tomorrow. So let's see how it plays out. I would be concerned if I was long this and it got down to, this level and broke it. If you break this level, that would be a concern of mine. Other than that, I'm not overly concerned. In the mid 30s, it becomes concerning, like 35. Other than that, who cares? I mean, it's still in its pattern. So just consider that. So Adam would be the next one. So I know a lot of people were trading this one today. Hopefully I was pretty clear on the level that you needed to watch. So it's this 29.05 level, right? And you can see where we went to and how we rejected the other day. And then you opened at the high, closed in the middle of the bar, and now here you are. So it's not something that you really want to run into right now. You're going to want to sit, watch, and wait on this one. For me, the pivot, you could still say I'll close above 29, or you could just wait for this now at 30.25. But it needs to do that. And it very well still could. You have to understand something. Like these patterns are not going away because you had a bad day, right? I feel like I'm rhyming everything tonight. But they're not going to go away because you've had a bad day. So I think that you have to look at that and say, where does that put me? Well, it puts you in a position where you could actually go out there and start position building some of these stocks that you want to be in. Just because it doesn't go up massively in one day and you miss this move does not mean that the move is over and it's coming back down. Everyone's a little gun shy right now, right? And everyone's very fast to pull the trigger to sell because they just got creamed. So you have to understand like the market sentiment and what's going on with them, with the mentality right now, right? You talk to traders, they're like, oh, I just lock in a profit. Oh, the first sign of weakness now, I'm out. Okay. Very different than, diamond hands and we're going to hold forever. It's changed a lot in the past 6 months since January and February. That doesn't mean that you're not in a bull market. Okay. The NASDAQ closed at a high. It just means certain stocks are going to sell down at certain times and they can present buying opportunities. This one, you're going to have to wait and see. To me, it'd be great if this came down to this 22 level and started to consolidate before rallying back up and taking off. That's what you really want, because then you have a stronger base on the breakout. But either way, you really need to clear this 29.05 and close above it. And if you want to be super technical, you have to watch that wick. So CCIV, we're in $25. Stop at the time was low of the day. That's going to just be moved to that 25 close. If you close below this 24.96 line, for the newsletter, you're just going to have to get out. I mean, that's really where I'm going to put it. I don't want to be closing below support and resistance lines. That said, I think you're okay here, but you see how this is crossing? You could come down, base, and then go back up, and that'd be beautiful. See, you're not going to undercut this, pop over this, and then all of a sudden roll back down. It just doesn't work that way. That pattern doesn't really exist unless something fundamentally, massively changes. And I just don't see that on the horizon for some of these names. So I like this, and I still would be using, I'm going to honor my stop, but I would still be using these pullbacks as buying opportunities. And, one that I did that with today that I recommended was CELH. And I really think that you have to be all over this. This stock was just had a massive, massive breakout. If you look at events and you look at the map and you see May, after earnings, it just rallied. So they took advantage of this to sell stock. Good for them. And it's got to cycle through. All this stock has to cycle through. But once that's done, and the people that bought the secondary, when they get settled and they start working themselves out, people were selling the secondary today. That's pretty obvious by this enormous volume spike. This is going to go higher. This did not trade like PLBY today, which we'll get into. Okay. This hit a resistance level, stopped, right? Came back down, and is sitting right around the 21-day. Now, you close below the 21-day, but you close below the price offering for a reason, because the market makers don't want to take any more stock in. So they're letting it sit there, and then if people want to sell it to them, that's fine. Then they'll cover it up at 62.5. But you can just see you're just riding that line even after hours. You're just riding it. And I don't think that that's going to stop, right? You're going to clear up whatever's going on there with that nonsense, and then you're going to start going back up. And you're right there. You're right on this level. So I like this trade a lot. And I would, give it a day or two, and I think you're there. And I think you'll get a nice little reversal out of it for those that are asking. This did not have major carnage associated with a secondary like GME today or, PLBY. And we're going to get into those. So Chewy I wanted to do because it came out with earnings tonight after hours, and I know people are looking at playing it. Frankly, in regards to the call and the earnings and the fundamentals, I thought they were really good. I thought it was a great call. As far as earnings, I haven't listened to the call yet, but reading the reports that came through and the guidance, and they're raising guidance, I think it's great, especially considering that most online companies probably aren't going to be doing that right now, considering the way the economy is opening. But this one's doing it. So I think that's awesome. So you're kind of just trapped in here between the 75.20 and 81, after hours. And let's just drill into this so you can see what I'm talking about. So you can just see you just gap down right off this line, right? And then you're just bouncing around. You tried to get up once and just got knocked back down. So usually patterns like this, when you see this, it just takes a while for them after hours to work themselves back up. Usually like this is just a major reaction. And that's exactly what it was, and presented a buying opportunity for those that read the report and took advantage of it. When you see a stock come down like this fast, right? And then you read the report and you realize that they're raising guidance, there's usually a trade there. You usually can buy it because these are the algos that are just shaking everybody out. And then once people start reading the report, they start thinking about it going, I'm not selling this. It's actually up. Their earnings are growing and they're beating expectations. When you read a stock and it's beating expectations, very rarely do they and they raise guidance, very rarely should they sell down unless they had a massive run ahead of time. And you usually want to look at that ahead of time. But this should go at least to flat by the end of the night. That's just my opinion of it. But watch this level right here. I'd like before you take a longer term position to be watching this thing get above the 200 day. It's been fighting with it for a while, but I do like the name. Well, this one decided to finally break out. And if you look today and you look up Cloud, CLOU, the ETF, you'll notice huge volume in this space. And here you are, right across the board. And you'll just see this. Okay. 1, 2, 3. This is one of the biggest days you've ever had, right? And it's just acting exceptional. And then you can see where it came out with earnings. And it just didn't do very well after earnings. But now look at it. It's doing exceptionally well. Coming down and breaking out like this usually leads to a much larger push. I'll say that again. Coming down like this and then breaking out usually leads to a much larger push. That's the kind of push that you'll see that could get you through these lines. Okay. Because now people are realizing, like, if I want to be in this, I better get in this. And that's why you have this long green bar today, because when it did that, the majority of people that got stopped out here actually increased their bet size here because they believe it. It's just the way certain technical analysis patterns work, and that's what this is definitely one of those. So this level 235 is going to be an issue. You have yet to break through that since it started back in March. Breaking through that, and you're going to 251 pretty quickly. Like, there's nothing really in here that's going to stop us from that happening. So DDD is in the newsletter, and we're in at 2650. Look, we went to 32 and a quarter and we're just unable to break it. And we're not really breaking the 29 either. So I would just recommend sitting with it and let it do what it's going to do. I would not exit and enter and try and get back in if you're looking longer term. If you're looking shorter term, if you break this $29, you need to get out of it. It's really that simple. Just get out of the trade. So Donkey Kong, as it's affectionately known, it's just you're in this trading range. Look at this. Let's get rid of this. See this big wedge you have here? See how you broke out of it right on that wedge? See how you ran and now you came right up to this red wick and now you're rejecting? You need to really avoid this. This is a classic rejection. And I know that you see these lines and you're getting all excited about where they are. But when you are trending sideways, which this has been doing for a period of time, those lines don't hold the same value as they once did. So you really want to be in a trending market to determine where these lines are. And I know people are excited when we got above the 21 day and the 200. And I'm not saying that it doesn't hold significance. It does. But you have a channel right here that you're right. And you can see that. I mean, I can throw it in real quick. Right. So you can see where that is. And you can clone this. This Trendspider has this little button. You just click the other side of it. So you see, all right. So here you are wedged in here. So if you break through this, then you could come back down. Rejecting at this level is not what you want to see. It's just not. So I would wait wholeheartedly until you're over 54.90 before buying it. You need to see it clear that 54.90 level. And let's just throw the indicators in. And I get it. I understand why you're looking at it. The other thing I would say is your volume has just fallen off a cliff. And it's been like this forever, right? Even down here, like no one's really paying attention to it anymore. It's not like you're not seeing big spikes of volume. So keep that in mind. DMTK, we had a level for it at 45.50 and we were waiting for it to break. And, the one thing I would say is these moving averages, the way that they're starting to curl and point up, they do tell you a story. They tell you a little bit more of a story than they did with the other trade. And the reason is because of their location and their order, right? So they're giving you a clearer read on what's going on. That's the best way I can explain it. When you look at that versus look at this, right? That's just a cluster. So to say that has the same significance as when these lines start rolling and the 21 here is going to cross the 50 and this 200 is going to point up and the 200 is going to cross the 50, like this is really setting up for a move. And we just have to see where it plays out. I've been waiting for this 45.50 level to break to actually add the stock and possibly even put it in the newsletter. And we just aren't there yet. We're just not there. So that's what I'm waiting for. What would concern me is a close below the 21-day because I've been riding it the whole way up. So if I close below that, not the 50-day so much, but the 21, if I close below that, I become concerned. So ENPH, we've been watching this. And here, let me just pull this way for you so you can see this. All right. So ENPH, you're just right along this long trend line, and we're waiting for it to break out. All these lines are basically converged on one bar, which is fascinating. And, I have some volume, but it's not really telling me a full story. So if I look at the volume, the relative volume, it's not really great, right? So that's not really helping me make an informed decision on what to do here. So we can use some other variables and indicators to determine if this is something that we want to look at or not look at. So what you're finding is that your point of control on your volume, okay, your volume profile, which is right here, is here and here. So here's your point of control, right, which is right where we are. And then here is your VWAP from the volume profile. And where's your stock? Sitting right on all of this. So here's the thing about this. If you break this line up and you break both point of control and VWAP, this is going to get a massive squeeze. So you can see why it's advantageous to use different indicators at different times. The best time to start using volume weighted average for me is after a long downtrend or after it bases. It can add a lot of value on where you're at. For example, when you broke it here, that was pretty much it, right? So I would imagine when you get through this, I would expect to move. I would expect this to really get going. So keep this in mind. I would definitely put this on my radar, but you just need to break through here and then head up to this level. But it's definitely one to put on the radar. There's no question about it. If it squeezes through here, you'll get to 175 fairly quickly. So EXPI, and what you're going to see here is you have this channel right here, and everybody's freaking out because we got over this line and then we went back down to it. And I understand why it's concerning. You really need to see what happens tomorrow. If you're along this and we take out another lower low tomorrow, you may want to get out of the trade and simply wait for it to clear up and break above this. That might be your move, because right here, it should not be doing that, right? It should not take out the 50-day. And if it does do that, I think you need to be concerned. And this is another example of a huge downtrend, and it would be helpful to use your volume profile here to get a better understanding of what's going on. And here you are. You can see your point of control and how it respected that. And you can see where your volume profile VWAP is and how you're having issue with it. So that gives you a little bit better of a story. What I like about this trade a lot is if you just look at the volume, and we can go back further with the volume. It doesn't really matter. Hold on. Let's go back to right here, and bear with me. And we'll pull this out. So if you go back, you can kind of see how you're above it here, right? So you just want to take a look at this and play with it a little bit and figure out what's working best for you. For me, when you see something like this from the volume point doesn't really seem to add that much value, right? Like, who cares where that was? What you want to see when you're looking at it is, hold on one second. What you want to see is where you're including from the break up. So that's really your levels. So you can play with this a little bit, and I hope you can see the difference as I move it, and then find out what works best for you. For me, if you allow this to go to where you did your first breakout, and then you have a huge peak, and then your trough is back to that breakout, that's a good enough sampling that I would use. I would use that more than use just go back a year. Because if I go back a year, and I hope you understand this, if I go back a year, I have all this data in here when it was at 5. That does nothing for me at all, right? I need the data that's most relevant. So here's my break. You can see what I'm moving on the left-hand side, and I go to the breakout and I leave it. And I find this more relevant. And you can see how that shows you that support level and shows you where you're running into issues on the VWAP. So that's just one way that you can use it. There's several ways, and it's up to you what works for you. But if I was long this and I took out that lower low and closed below it, I would strongly consider getting out of it. And the breakout is going to be 41 on this. That's what I would look for. So FUBU, we're in at 26.25 from the newsletter. As I stated, it's basing, just give it some time. I mean, it's not fun. I get it. But we did what we did. And what we did today was, let's see where we closed. 27.84. Where are we? 27.98. And here's what you have to think about. Okay. Let's really look into what happened today, because I think what happened today is pretty significant. So see how you ran up, and then here's your wedge, and now you're sitting right here. Look at this bar. It's a doji. It determines that doji is telling you that there's some indecision there. Okay. But we do have a price rejection after hitting this line. We didn't just put those lines in. They've been there. And that line coincides perfectly with this 26.88. Right, which we've hit here and here and here. So who's ever buying this, right, who cleared it out here is still there. Until that breaks, I would not be concerned. If that breaks and you close below it, you might go lower, and you could use the lower low as a stop if you were concerned. And I'm pretty sure that gets us right where we need to be on our position. Yep, it would get us right where we need to be positioned. And is it bothersome? Yes, of course. I wanted it to go to 35. It might mean that we get stopped out and we have to go again and find another entry. I'd prefer not to do that, but that's not up to me. The price determines whether or not I get out. So right now, just watch this level, this 26 level. This is really your crux, 26.88. Just watch that, and then you'll be able to make a better decision. So FUBU, I really think that if you take a look at FUBU and what's going on there, you can just see the downward trend line, right? And you can see how it's respecting that downward trend line. I see no reason why people would buy this before it breaks this level. It is very clear for 1, 2, 3, 4, 5, 6 days that everybody is watching that level, right? I mean, you can see, and people ask when I say rolling, what do I mean? See, like it's just kind of rolling. That's what I mean when I say rolling. So it's just rounding up here. And when you round, you roll. So as you did here, round it out and rolled down. Round it out and rolled down. Okay. Forgot to put the phone on silent. So let's just keep going. So FUBU, you got to watch this. You have to see how this goes. I really would watch this key level, though. I think it's really important, too. Okay, FUV, we were in at 14.25. 1350 was the close, was the stop. Did we close below 1350? We did not. If you got stopped out because you don't use the close, then you got stopped out. That's a nasty, nasty red bar on this. But let's just look at this as what it truly is, okay? So I have the 21 here and the 50 here, and they're crossing. Okay, they're not going to just magically point down. So that means the direction of this is what? Still up, right? We've undercut the double. So I'm not worried about the trade. You just have to protect your capital. If we get stopped out, or you got stopped out, just get back into it. It's not a problem. You just have to wait for the next setup. But what you have here is you have the completion today of an evening star pattern. And then after the completion of that pattern, what happened? It started going back up. Right? So let me walk you through this. So here's the left side of that evening star, right? Here's your doji, breaks down, opens here, goes right to this level, right? And then you see how you have a wick here? This is why it's so important to use candlesticks, so you can understand just a little bit better what's really being done. So you closed right on this line. Well, that's interesting. Look where that line is, right here, the last breakout. So I would say that I don't think that this is over. I may consolidate here for a little bit before it goes higher now. I mean, this is not a good thing, right? But it's not the end of the world. It may have just cleaned everybody out. And my breakout bar, the volume on it is like half. So I'm not overly concerned. If I get stopped, I get stopped. But to me, it looked like it was going to be an absolute monster. Got up to 17. And if it comes back down, then it comes back down. But the pattern is complete, and that's exactly what you're looking for. And then you just want to see that it holds these levels. If you close below the 200-day after breaking out and being above it for 3 days and then putting up, that's going to be a obviously negative sign, and you're going to want to be out of it. But I would not throw the towel in on that yet. So GME, I don't know how many people really want to go over this, or frankly are sick of hearing about it. But you know, today was a very interesting day for it, to say the least. And it was just a very simple trade for anybody. I mean, it was just straight selling all day long. You just went down level after level, right? So, I mean, I heard one person mention that everything's at a 45 degrees, and they're right. You know, when you're set up like that, that is not retail. That is an orderly institutional seller that is just dumping as much stock as they possibly can. And I don't know who it is or what they're doing, but people are just dumping this. This is not retail. Retail doesn't sell like this. Retail sells in a panic. This is extremely orderly, with them being told to sell so many shares over a period of time. And you're going to say, well, how would you know that? Well, look at what's going on here. Look how much was sold, came in here. Look how much came in here, here. It's not a coincidence that all these bars are roughly the same level across the board, right? That's what they were told to sell in those increments, probably by whomever, and then you have the other volume on top of it, so that they don't alert anybody. You know, they can't just dump it all at once. So that's what happened today, and that's why it was so orderly. And if you look at this, you went right to this 218 level. Let's get back to this so you can understand a little bit better. You got right to this level here today. And, you know, I did call out a couple levels on this, but I just think you have to really watch, you know, like when we broke the 240, I thought it became pretty clear what was going to happen. You know, I thought that was pretty obvious that we were going to continue to break down. I mean, once you broke this level again, you tried to rally, failed, and broke this, that became pretty clear. So I think the question is now, if you're in this, what do you do? Right now, you can't buy this, right? You can't look at this and say this is a good buy. You really have to understand what's going on here and who's getting out and who's getting in. So you have the companies dumping tens of millions of shares on the open market. That's their plan, right? I didn't read all the details, but that's their plan. So that's going to absolutely annihilate retail, because now you have more shares outstanding. Not only do you have more shares outstanding, now they can lower the cost of the borrow on the short side, right? So it's not as much as it once was. And on top of that, you have people that now have more shares to borrow to short. So it completely increases liquidity on the short side and actually really hurts the retail investor. So for that, it's not good. So you just kind of have to think about those mechanisms and how they're going to work. So the question is, what do you do now? I don't think you can go near this. I think what you really truly need to see is if it's going to hold this 21-day or it's going to go to the 50. And you're really just going to have to give it some time for it to figure out what it wants to do. But right now, I would not chase this. Let it play itself out. If anything, if I was long this and it rallied, I would be getting out. You don't have days, just so we're clear. I want to make this abundantly clear. You don't have selling like this and it ends in a day. It's very rare that would happen. Okay. It usually has at least another half a day associated with it, and you're going in the earnings expiration tomorrow. So I would just tell you that if you're thinking about the long side, to be extremely careful. And you know, you're shorting or you're buying the puts, there's no point. You know, the implied volatility is 500%. They don't even move when the stock goes down. You hardly make any money. So it's not really worth it even trying to short it or buy puts against it. It's just silly. The only people making money are the people that are selling options and sitting with them. So just consider that, and just consider not trying to run into this as if it's a bargain at this level. So gray was one someone asked me to look at a little bit ago, and it has broken out here. But let me just throw this in. You have broken out here, but after hours, this is a big mover. Okay, so this, I don't know why, but for whatever reason, we've gotten through these levels that the gentleman asked me to look at before, the 522, 542 levels. They were important. And as soon as we got through them, boom. And we had huge volume. And the first level that I threw out there was 850, and it looks like we're getting right to that tonight. If you break this 850, you're going to 1509. I really believe that, because there's nothing here. It's like it's like a water slide. I mean, when you see a red bar like this and you see nothing around it, right? Like nothing around it. So in other words, and I'll say nothing again, but you have this little wedge right here that's going to do nothing because it's all the way back here. So I come up here for my next level, right? This is so insignificant. There is no volume here whatsoever. So what does that do for me? That tells me that if I get into this, this is as good as a gap. So if you are playing this and you get over this 850, you may want to consider holding on to a piece of it because you can get to that $15 level. You could, and it could be really fast. So, and right now you're at 830, 835. So I think that this one is setting up to move. So let's just keep on going. So this is INSM that I was asked about. NSM. And let's put this on, put the cap lock on and go INSM. There we go. Okay. And we'll just color this in and go from there. Okay. So what this is doing for us is just giving us an understanding. You're in the gap. Essentially, remember how we just had this talk about these red bars? And you can see the volume here, how it encapsulated this move down, but didn't really matter. Broke down again. But then we broke over it, and then you broke over up here. So you essentially, this was a flag that broke, and then it was a failed break. Then you got over this wick, right? So hopefully you follow along with that. Now the question is, what do we do? Well, this is where you're going. You're heading to that level. So you have a 1.5 points. So I don't really see the need to rush in here and do anything. I would sit, watch, and wait. I mean, I can go back to it and look at it really quickly, but this is doing nothing for me unless you have some fundamental reason why I need to be in it. And look at what's going on here. And did we just have earnings? Is that what did it? Yeah, earnings were a disaster apparently. So I would not run into this. I would watch and wait, and if you were really interested, get above the 50-day and get above this 36 level. JMI was setting up perfectly, but this is what some of these charts are looking like that they have the ability to do. And as I stated, I don't think Fubo is going to do this, but it very well could. This is a very similar pattern, right? So here's your rising wedge. You break it, and then now you're below your 200-day and your 50-day and your 21-day. Your last stop on this has to be this lower low. If you break the lower low, then you can completely roll down here. So it's not something that you're going to want to be involved with. You're going to want to use this low as a stop. And again, if I was looking to add or jump into this, I would not do it until I got above that 34.18. That's really the level that we've been watching and waiting for, and it just hasn't done it. So we just want to sit, watch, and wait. You do not rush into that and use the lower low. So I like this trade. I think it's setting up. So let's get rid of all these lines for a moment. Okay. So you had a little wedge here. You broke it down, and now you've gone through that wedge, right? You really don't need this anymore. But if I can get through this 50-day, which I haven't been able to get through since back here, this could really push. I like this one a lot. And let's just look at this relative strength-wise and see how it's performing versus where we're at. Yeah, and that's exactly what I like. I mean, look, you can just kind of walk through how right here, right? And now we're here, and it's hot. So this is telling you with this kind of divergence that you're seeing and the way that this is following the pattern and the path, that this is setting up to move higher. And that there's a change in trend here, right? In the magnitude of the move. And how do we know that? Well, we know that from this. Well, we can actually do this with it, right? So you had a little downtrend here, and then you've broken that downtrend, tested one of its levels, came back down, and then gone. That's exactly what the stock did. And now this peak is here to here. So realistically, just a rule of thumb, you could look at it and say we can get back to this level, 78. And I think it can. I think it can get back there. And I think this is what this is how it's setting up. But right now, you have to get to the point where you have institutional sponsorship. But you're seeing the battle being won here, right? So as we know, candlesticks, the wick is price rejection. So nobody would buy here, and then it tried to go up, and nobody would buy there. And now today, were they buying? all day long, and they filled that area. That's why candlesticks are so much more important to me than looking at just open, high, low closes. They tell you a story if you learn how to read them. You know, whether or not it plays out, you don't know, but at least it tells you what's going on. So Playboy, frankly, the secondary was just an absolute disaster. It was on my short list this morning to go long, and just the action in it was just absolutely awful. So I just avoided it. But you can see here, like, we might as well just leave the RSI and this peak, they're pretty much in line. They're not telling us anything, and we can get rid of these segment lines. But they're not really telling us anything, and you know, it's pretty much in line, so it's not really adding value, right? But now we just look at the stock, and what's the stock telling us? Well, I mean, I cut through the 21-day like butter. I went right to the 50-day. So and now you can see, hold on 1 second. So now you can see what's going on. So for those that are playing, that are going to watch this, you know, just FYI, it hit that 850 level that we were talking about. So for those that are watching, so see if it breaks that level. If it does, I do believe that you're heading towards, you know, you have a shot at heading towards that 15. So PLBY, let's just see what's going on here. You're in a position where you have to hold that 50. And if you don't, you're going to have an issue. So just consider that. I would really strongly consider that. And I just think that's very important. Today's action was awful. And the fact that the investment bank that did the secondary was even unable to hold it up at all. Let's just get rid of the pre and post market and just look at the day. This is your day. This is your first 15-minute bar, right? You opened at the high. You sold down, and then you broke your opening range, this first chance you got. So there's nothing good about this. Every rally was met by selling, right? Now you undercut here, and then you tried to rally here, and then you failed, right? So that's not something that we want to look at. Okay, so let's just keep that in mind. I really think that it's something that, you know, we want to just absolutely avoid. It's just my opinion of it. So you need to see this play out and develop. And right now it's telling you that it doesn't know what it wants to be when it grows up. And based upon that, you just need to avoid it, because you'll get yourself into these, and then now you're stuck. Now it's a trap. Then it breaks the 50, and you'll say, oh, I want to see if it'll hold this level. So this is not where you step in front of a train to pick up pennies. You have to sit, watch, and wait. This could present an opportunity, but it's certainly not presenting an opportunity right now. It's a disaster right now. So avoid it. And if it takes out that lower low, you need to get out of the way, because it can sell off a lot more than you think. PubM is actually starting to shape up. We've tested this line once, the 35.58 line, and we're not able to get through it. And now we're trying to get through here. And we're just not able to. So let's just sit, watch, and wait. I just wanted to throw this one out there because I know a lot of people like it. And you saw the undercut here for the double bottom, but you're just unable to complete that confirmation pattern right now. So just sit, watch, wait. RBLX, so you got in at 78. Well, we got in at 78 from the newsletter, and you went to roughly, we were going to 89, right? That was our stop now. And then we went to 100. I mean, we just kept moving it up over and over again, right? And then we sold and trimmed up here. So what to do now with it? Well, I was pretty clear that if you, we can throw this in. I don't think it's going to make a difference, right? So I was pretty clear here. Like, look, if you break this level and close below this level, you just have to get out. And you really didn't do that, right? So you're still in there at 89.25. And it's always so fascinating to me how these levels work, because they do indeed work. And you can see how you undercut the level, they shake you out, and then they close higher. And that's exactly what they did here, right? They took you out because they knew that that was your stop, and then they brought it higher. And the reason that I use closes, and it's hard to use closes depending upon your position size, right? Because your loss, it could just keep dropping. So you can hedge it And you can even sell a portion of it on that and then hold a portion and see what the close is. There's several different ways to do it. You have to find out what works best for you. But I do like seeing the closes and think it makes a difference. And this is a great example. The question is, what do you do now? You can't do anything until it breaks out of this channel. Nothing. Okay. It's got to break above this channel. It's very clearly rejecting this channel. It rejected this channel. We talked about this. So just stay out of the way. If you're in it, just continue to hold it and let's see it develop. So run, I was interested in showing this one because you're getting tighter and tighter under resistance. And I don't think you're there yet. I think you have a lot that's going on. But this on a lot of my scanners was just absolutely blowing up today. And this is the solar ETF TAN. I mean, it just kept hitting high after high after high. It was all over my high-low list on one of the scanners. So I really think that you could go here. This group is setting up, and this is super tight versus see how wide this was at one point? And look how tight this is now, right? It's just coiling. Here, look. Let's take the time to do this. Right? You see how that's narrowing? Let's get rid of these indicators for a minute. You can even see a little bit closer. See how you're tight right in here? Right? So it's kind of breaking, but you really want to see a break. And I wouldn't play that anyway. Let's just get that right there. Yeah, because, did it break? Yes. I would want to see it clear this, 81. And then I'd be very interested in it. In that space, I think that there's something going on in that space. Saw a lot of money go into that space today, a lot of inflow go in there. So I was asked about this one. This is, hold on one second. Oops, that's not right. Put in the indicators. And this one is SGTX. There we go. Okay, so the only reason I have this up here is because that volume is absolutely insane. I don't know what's going on. I don't know how you're doing this kind of volume and you're not moving, but I would have this on a watch list. When something's going on and I don't know what it is. I don't know if they're expecting news or what, but that is insane volume. And this has just had constant selling the whole way down and used to have these huge bars, and it just doesn't have those anymore, right? It just keeps going down. Watch it. I'm not saying to buy it right now. I'm saying to see if it pulls like a gray-like move or one of those others that just, pop up out of nowhere. Because when you have volume like this, they're clearing somebody completely out of this trade. They're just crossing whoever wants out and has had enough. And when that's done and that's dried up, it could move higher. So that's why it's in here. There's nothing actionable about the chart, but it should be on your radar. So skills, you tried to rally out at that 23 level and you just couldn't do it. Right? We tried. We got to 24.48 twice. And then you're just wedged in here. There's a lot of resistance levels and support levels in here. There's almost too many that I have drawn, but they're all there. Like 20.49 is where we hit today and bounced. 23 is where we couldn't get above again. We only closed there once. So you just have to watch this, but I would not be a buyer of this right now. I do like the 21.50 cross, and we can get rid of all this now to clear this up a little bit. You can always put them back, but I would really watch this and really be careful with it. It's not something I would dive right into. It really isn't. I would sit, watch, and wait. I'm trying to give you something that I can see that is more positive, but I'd rather just be blunt. Like the fact that you have these wicks here and then you open today at the high and then you go down, like it's just not something you want to be involved with. So 10 is one that I really like, and I like it for the long term. And I'll show you why. We've talked about this one several times. So you see how you're at this 21.25 level and 25.59 level, okay? I really like these levels. The issue with it is you need to clear this level, this 25.25. And today, and I have to change this before tomorrow, because if I don't change this before tomorrow, I'm going to have what? A long-legged doji on top of this breakout, which is setting me up for an evening star, which I don't want to be a part of, right? I don't want to be in a weekly evening star, which means that if it breaks, I could test $16. I don't want to be there for that. That's not appealing to me. So I need to watch this. The very first thing that you need to watch tomorrow is this line I have drawn. Okay. You need to watch this line and go from there. Be very careful with this one. So, because this is really a very nasty rejection. It's so nasty because you close below your open and close at the low, but there's some buyer right in here, right? We can see it if we really study it. So just watch that line. And if you take out a lower low tomorrow, realize that it can get a lot worse, a lot faster. Tiger did, it has problems with this 28.38 level. Again, sell, sell. And I think you might have another down day tomorrow in this. And I'll just tell you why. My concern is the wick is rejected 3 times up here. And now you're down here and just holding on by a thread. So if I break these levels, chances of me testing 23 again are pretty clear. And your major support on this, as we're aware of, is this level, 23.89. It's been our crutch, right? Like it's been, I shouldn't say it's the wrong word to use. It's really been like the bane of our existence. Like it just can't get above it. Like here, you're hitting here, you're hitting here, you're hitting here. I mean, it's over and over again, right? So I really think that you have to watch this. And if you're going to be okay with that, testing 23.89, stay in it. But that can happen here. And it's very clear that you're having problems at 28.38. I mean, it's just rejection after rejection. So TLRY has been all over the map today. We're really closed at 20. It's at 19.85. I put a trade on today on this. It was a very simple trade, but, I really felt that you might hold here at these levels and then bounce. So when we bounced, I got involved with it, and I'm still in the trade, I right around $20, but I just wanted to add to it because I think it has such long-term potential. Now, if it breaks the low of today, you're going to need to get out of that, which was, hold on 1 second. Let me give you an exact number. 19.75. Is that the low of the day? So if it takes out that low tomorrow, you just need to get out of the trade because it could get worse. So it should not be taking that out. It really should be pegging to $20 tomorrow on option expiration and just sitting around there. But let's see what happens. There's a ton of options on that stock. So I would imagine that you'll see something there. Now, I was asked about this one a lot today. And what I would say is you went right to this level and then you rejected. Right to this level and rejected, right? And now we're here again, 145. So let's look at this so you can understand this. Because I had one gentleman I was talking to and he was asking about it and he wanted to get it. And I just said to him, it's got to clear 150.80. And this was my rationale for it. These long red bars, they set your level. Okay. And this long red bar open set your level, 150.80. Couldn't get above it. Wham, wham, wham. All I had to do was watch this level all day and just go, I can't get one 15-minute bar above this. There's no way that this is going to rally. And I want it to rally because this is for people that follow me on Twitter, and if you don't, you may want to because I threw out a bunch of actionable ideas. You have to consider this. You have to look at this and consider, if I can't get through there, why do I want to own it? Because I can just see this rolling and breaking here, and now you're second guessing yourself, and it's pointless. So just give it time. Like this is setting up, right? Let me just get back into this because this is a big one for people I know. It's setting up, but it's just not there yet. Okay, usually I have a 2-bar pattern that leads to a green bar. 2 red bar pattern leads to a green bar. 1, 2, green bar, right? I mean, you see them all over. 1, 2, green bar. I don't have that. I have something similar to this, which I'm not really crazy about. I don't find it enjoyable. Like it's not something I want to be a party of. So, I could get to this level. I could get to 139, 140, and then I probably bounce off the 21 day. But it doesn't mean that I have to be in there for that. So that's it. That's my thoughts on it. So ZIM is, something that we've been talking about for a while. What I really don't like is I just don't like all the uncertainty that was here. And I wanted to get above this level before adding to it. What's interesting is the uncertainty now has gone to there's no selling. So why people would look at this and go, oh, it's a red bar, that's bad. Not so much. because all of a sudden people were refusing to sell at this level. Here they were refusing to buy at that level. Do you see the difference in why it's important to understand candlesticks? Like I keep trying to hammer this home, but it tells you a story. I refuse to get out here. I refuse to buy. I refuse to buy here. Story's changed, right? So that means that tomorrow this 45.57 level has a shot of working. And if you notice what's going on here with all these stocks, you're seeing massive sell-offs, right? The secondary priced at 40. You know, CELH, which I do own, and PLBY could not hold their secondary. ZIM is up 11% from its secondary in 4 days and didn't blink an eye today. So that shows you where some relative strength is. And you might want to look at this little shipper. Might be worth it. Anyway, do me a favor. Please click the like button because it's my goal to get in front of as many people as possible to show them what it takes to truly be successful trading. I would appreciate it. Have a great evening. As always, if you have any questions, simply reach out, comment, let me know what you like the most. And I also like hearing what you don't like. And I do laugh when you guys like tease me or joke about me saying the same thing over and over again. I do find it funny. And it breaks up the levity. So keep it up.